welcome to this special show on the World Economic Forum's annual meeting here in Davos. The mood was decidedly gloomy thanks to China, crude oil prices, geopolitics, the EU refugee problem. But there was one delegation that hit the high note on optimism, and that was the Indian delegation. Very optimistic about the growth prospects that India holds out. Well, we spoke to a whole host of Indian business leaders here in Davos. Sunil Mittal, Sajjan Jindal, Uday Kochak, Adi Godrej. You're going to hear from all of them and what they think the Indian economy holds out for 2016. Do you believe that India can stand out as an island of growth when there seems to be so much turmoil in the world, whether it's China at 6.9% or it's oil at sub $28 a barrel, which is actually an advantage for us, but have we made the most of it? Or it's the geopolitics of the situation. Can India stand out as an island of growth?
I think from an Indian point of view, there is a positive and there's a negative. The positive is a low commodity cycle is the best time to build India. And if we really want to make India, build India, this is a time, low commodity cycle, significant excess capacity in most industrial equipment around the world. India woefully short in the area of infrastructure. If not now, when do we build India?
I'm not sure that the optimism that Indian businessmen feel can survive the chaos that the world seems to be discussing here in Davos. I wanted your view on that.
Menaka, first of all, I don't think most of India's traditional business is that optimistic as it was, say, 2008-9. Okay, when we felt the world's in trouble, oh, we Indians have arrived. I think this time, in general, a large part of Indian business is far more cautious, having seen the pain which is coming out of excessive leverage. And you are getting into a time which has the risk of being deflationary. And in deflationary times, if your debt goes up, because asset prices move up much slower or negatively compared to the rate at which your debt moves up. Therefore, this is actually a big challenge for Indian business where excessive leverage hurts and hurts deeply.
How do we counteract the short-term pain that's going to take place?
In my view, in the short run, the government will have to do some weightlifting in terms of public spending. It has the significant advantage because of low oil, bulk of it collected as taxes rather than passed on to the consumer.
Do you agree with that?
So use that space and do some public spending.
The manufacturing numbers, the last we saw, the IIP numbers, they're all looking a little rough. Inflation, while it has seemingly come under control, looked like there was a little bit of a bump up because of food prices. It just seems that almost every few months we're back at that precipice.
Menaka, I am bearish 6 months, bullish 5 years.
All right. Well, 6 months is just about as much as we can do on news TV, right, so, to that extent?
Sometime next year, I think India will be actually looking at, and I genuinely believe that India on a relative basis, and this is all about relatives,
of course it is
on the right side of the trade.
I'm just curious to know, you look at your 6 months bearish, you've seen what's happened to stock markets globally and in India in the first 3 weeks of this year.
But I was 6 months bearish even in December, so this is not a surprise to me, what's happened.
Do you think this is going to be prolonged pain, at least the capital markets or the stock markets?
I see you can't predict markets on a day-to-day basis, but I think you're going to see some of this is washing out of the overall global system correction which is happening. I was at a function where some of the largest fund managers around the world were there, and their view is the global markets have another 5 to 10% to go from here.
South?
Yes. And then they see things to stabilize, and they are hopeful that from the current levels, we may be actually equal or better end of the year.
The government did put in place a safeguard duty. Unfortunately, prices fell so rapidly at that time that the duty was proven to be ineffective. Yeah. What more do you need the government to do right now to allow for the Indian steel industry to remain competitive?
We are telling the government that while you do the safeguard, 20% safeguard is good enough.
Okay.
But on that product. Okay. But then people circumvent it, so therefore they nullify the whole purpose of this 20% safeguard duty. So therefore we are saying that put minimum import price, that below this import we cannot will not be allowed.
Minimum price needs to work out to about 400.
420, 400 to $450,
okay.
Depending on what product.
Do you have an answer from the government on when this may or may not happen?
So there is a lot of positive traction in the government. I had a talk with Finance Minister here in Davos as well, and he said it should happen. We are sympathetic towards the steel industry. We want this industry to grow because this is one of the basic industries in the country. So therefore,
it's a matter of time.
Matter of time, yeah.
Okay, maybe between now and the budget?
Yeah, keeping our fingers crossed. Yeah, should be earlier. Budget is still far away.
You know, the other area where you were looking for acquisitions, to justify my introduction as the deal man of India, I was told that you were looking to invest about 4,000 crore rupees to double both your port and cement capacity. So port to 62 million tons, cement to 17 million tons. Are you in the market to buy? Are you in the market to build?
So no. So the port capacity, we are doing our brownfield expansion, organic, brown and greenfield, and cement to 17 million tons is organic. We are building capacity, and we are.
But you're looking for cement acquisitions.
And yeah, we are open to that. We are open to looking at if you want to grow faster. There is a lot of capacity out there in India waiting to be consolidated.
So who are you talking to?
So we are looking at various opportunities. We are not yet in any final stage.
Has Lafarge come to you?
Lafarge is also one of the targets that we are looking at. But I mean, these are all in the marketplace.
Okay.
So we are looking at those, and but nothing yet has been concluded. There's no finality yet on anything.
So how much are you looking to acquire in terms of cement capacity?
So we haven't put any number to that, but we are looking at doing about 30 million tons over some few months. Few years.
We hear that Lafarge might be willing to look at selling all of its business in India because of its run-in with CCI. Are you talking to them for that deal?
No. So we are looking at Lafarge also, but there are many others.
But the entire Lafarge India business?
Yeah, entire Lafarge India.
Entire Lafarge India business.
That's about 11 million.
And who are the many others that you're talking to? Which regions of India are you looking at these acquisitions for?
In the eastern part of India, in the southern part of India, western part of India. So we are looking all across.
How do you intend, or what is the plan to raise capital to fund all of this? So if you're doing a Lafarge deal or buying cement,
we will be bringing in some private equity, or we will be raising some because we own 100% of the companies.
So private equity at the group level,
probably
at the cement level? At the cement level. Looks like you're already in talks.
No, not yet, but possibly. That's one of the possible.
What about
options.
a strategic sort of
also
partner?
Could be. So we are open to many ideas.
When it comes to your Africa business, you sold the Burkina Faso and the Sierra Leone assets for close to $1 billion, if I'm correct?
We haven't given the amount as yet.
Okay, so but the estimates were somewhere in the region of 900 million. Would they be correct? Or ballpark correct?
Ballpark correct.
Okay, but you didn't sell the other two that you wanted to, which was Chad and Congo Brazzaville, right?
Yeah, so currently we've taken them off the table.
Correct.
Because our due diligence completed on 2 countries and we moved on that. So other 2 we are carrying on running ourselves. Okay,
so there is some understanding of why you've done this, but I'd like to hear you tell us why you've divested these 4 African assets.
Well, broadly, our view is that there are countries where we are very successful already, and there's now a limitation of growth. There are smaller markets in terms of size, and we are doing well, so there's the right point to go and monetize some of these. And we are also a little challenged, I would say, in some sense, in the Francophone countries, given we come from a different background, law, legal, documentation. I would say these are some of the reasons. Small markets, growth is limited opportunities, fits much better with Orange, which is expanding into the Francophone countries. So, works well.
Besides these 4, have you identified any others in your Africa business that you intend to sell?
Well, I think right now nothing, but I always would say we are open to restructuring. We have bought 3. We bought in Uganda, we bought our competition in Kenya, and we also consolidated in Congo Brazzaville, which is again a Francophone country, which was in the basket of meant for Orange, which has not gone as yet. So let's see. I mean, there probably will be some more realignments.
And what about the bleeding of the Africa business?
It's not that bad a bleed. I mean, we are still at close to $900 million of EBITDA, $4 billion of sales. It's a nice asset. I mean, the main hit has been on the currencies. And as you know, we have been able to finance ourselves very well. Most of the money is now in the bond market. Bonds are trading very well, which means the world view is very strong on Bharti. And what do we pay? Sub 5%. So on a $10-11 billion, we pay $550 million of total interest costs. We generate $900 million in Africa.
The growth may continue. The profitability of that growth is in question.
Yeah, so you grow volumes a lot more. You grow revenue a lot less.
The margins are shrinking.
And margins at the moment are not shrinking, but they would shrink if Jio was to come in and lower the tariffs and all. Momentarily, you will see some margins shrinking for sure.
So the big battle with Jio will only be the price, the tariff battle?
There is, I don't see it as a battle. In fact, in some sense, I've said this before, they're coming in, resolve some of the market infirmities.
Really? How?
There are 5 operators with 5% market share, approximate. So 25% market share sits there amongst 5 operators, which play on price, play havoc, just trying to pay off their variable costs of salaries and fuel bills and all that. They all washed away with this tsunami.